Indian markets scaled fresh high in today's trade for the first time this year. Yes, the highest ever. But how does it matter, and what was the return the indices gave in the run-up to a lifetime high? Which stocks contributed to the rally, and most importantly, is this a good time to invest in the Indian markets? Let me try to answer all this in this video, but first do remember to like the video and hit the subscribe button. The 30-share Sensex hit a record high of 63,588, toppling the previous peak touched on December 1st, 2022. Meanwhile, Nifty concluded today's session almost shy of all-time high. At low, Sensex was up 0.31% and Nifty was up 0.21%. But what led to this rally? According to analysts, the recent run-up is on the back of robust earnings, revival in foreign institutional interest, improving macroeconomic health of the country, and expectations of a longer pause on interest rates hike by the Reserve Bank of India. Dalal Street had a sluggish start to the year. The pressure intensified in March amid a banking crisis in the US that impacted global markets. However, the domestic benchmark indices staged an impressive turnaround in March, fueled by a foreign institutional investor inflow and a resurgence in risk sentiment. Since hitting a year-to-date low in March, Nifty has staged an impressive 12% rally. Driving this rally in the Nifty pack was Adani Enterprises, which gained a whopping 50% since March end. The stock of Adani flagship, which remember was battered in tandem with other group stocks after short seller Hindenburg came out with a scathing report accusing the conglomerate of fraud, witnessed a sharp recovery amid bottom fishing and a strong earning show where net profit doubled in the March quarter on the back of growth in airport and road businesses. Among other major names leading the rally were Tata Motors, HDFC Life Insurance and Bajaj Finance, which each surged over 30% since March end. What's more, only two Nifty counters gave negative returns in this time frame. Infosys, which was hit by a wave of downgrades after a disappointing quarter and reduced client spending and an uncertain demand environment, fell about 5%. The stock of UPL also declined by about 4% on the back of a weaker than expected quarterly performance. Despite the strong showing of Nifty and Sensex in the recent month, it was the mid-cap and the small-cap segment that fattened investors' wallets. Since March 20th, the day Nifty touched a year-to-date low, both Nifty Mid-Cap 100 and Nifty Small-Cap 100 have surged over 20%. On a year-to-date basis, Nifty Mid-Cap 100 has surged over 13% and the Nifty Small-Cap 100 index has added about 11% compared to Nifty's 4% run. Among sectoral indices, Nifty Realty was the top gainer since March, amassing a rally of over 35%. Nifty Auto, Nifty Metal and Nifty FMCG also rallied 15 to 25% in the same time period. Foreign institutional investors who were net sellers for the majority of last year due to fears of a recession have been lapping up Indian stocks for the last 4 months. FII flows into Indian equities touched a 9-month high of Rs 43,838 crore in May. So far in 2023, they have pumped in over 47,600 crore. According to analysts, the ongoing economic recovery, positive corporate earnings and a supportive policy environment are likely to keep foreign money flowing into the Indian stock market. Now, all eyes will be on the US Federal Reserve Chair Jerome Powell's congressional testimony later this week, where he will submit the semi-annual monetary policy report to the Congress. We will of course bring you all that news here on News 9, but before you leave, do drop us a like button, and if you like this video, hit the subscribe button. That's all for now. Goodbye.